Hello, welcome back to Learn Economy. In this video, we are going to look into the issues in the context of banking sector reforms. We have seen that India has gone for sector reforms in the banking sector, but these reforms have got certain problems. Especially these are in regard to the functioning of Indian economy. We know that the Indian government, the government of India has gone for the sector reforms in 1991. The financial reforms or the financial sector reforms, of which banking sector reform is considered to be very much critical, and the Reserve Bank of India, which is known as the central bank of the Indian economy, plays a very important role, or the significant role is played by the central bank of the country in the banking sector reforms. But we do have certain problems in this arena, and this is what we are going to discuss in this video. Reduction of fiscal deficit is very much important when we have to do with bank sector reforms. We know that it is considered to be a medium-term objective of the financial sector reforms to reduce the preemption of resources from commercial banks to a reduction in SLR as well as CRR. We know that SLR stands for the statutory liquidity ratio and CRR stands for the cash reserve ratio. So this reduction in cash reserve ratio, this is something which will lead to a result in additional resources to banks for the deployment. But this will also increase the profitability of banks. This is because CRR is not adequately remunerated. Reduction in the statutory liquidity ratio, this is considered to be something which is constrained as long as fiscal deficit. Particularly, the revenue deficit remains very high. Now, coming to the non-performing assets, one of the very important problems faced by the banking sector in India till now. Still, we are facing this problem. Certain loans are considered to be non-performing asset. So we are actually trying all means and ways to reduce the number of non-performing assets. So there have been many efforts taken by the banking system to get rid of the problem of non-performing assets, but still we are facing the same problem. There is no doubt that the level of non-performing assets should be properly assessed, accounted for, and provided for adequately and reduced progressively. And we could see that since our banks are currently subjected to extraordinarily rigorous prudential requirements, we are trying all our means and ways to deal with this issue. Then we have debt recovery. We are trying all our ways and means to reduce the debts, and we are trying to recover our debts by going for several ways. It is alleged that some institutional arrangement like Board for Industrial and Financial Reconstruction is created in order to deal with the debt recovery as a pressure to the Reserve Bank of India to reduce the non-performing assets in the absence of effective debt recovery. Banks have got no option except to pick up gilt-edged securities or the government securities. So rather than going for credit, thus this will chop the credit delivery, particularly the medium and this will be applicable to the medium and small scale units. Now, coming to the ownership, regulation, and competition, we can see that a large part of Indian banking operations is accounted for by the public sector banks. We could see competitive impulses engineered by the Reserve Bank of India. And also we could see that the regulatory and prudential considerations are advanced by the Reserve Bank of India. And even though we have all these things, it is not possible to ignore the systematic implications of large subsystem of public sector banks. So whether even though the government plays a role, even though the Reserve Bank of India plays a role, regulation is something, regulation of the banking sector is something which is in the hands of the Reserve Bank of India. And coming to competition, we can see that the private sector is competing with the public sector, and public sector is going for disinvestment, mergers, acquisitions, etc. So in this scenario, it is something which is in this scenario, the banking sector is something which is suffering a lot. Coming to the internal system and the problems with the same, we can see that the internal control system in the banks, especially the public sector banks, is facing a lot of problems. The placement, work practices, etc. in the public sector banks as well as the private sector banks faces problems. Flexibility in obtaining and enhancing highly skilled or talented labor is another problem faced by banks, and also introduction and effective use of technology is another problem. How special are banks? This is another question which we need to ask ourselves. Whether our banks, whether it is public or private sector, are these specialized? The prudential requirements imposed on banks to protect the deposit and ensure systematic stability do imply a cost for the banks. So, we can see that this additional cost is considered to be something which will give a relative advantage to financial intermediaries other than banks as well as capital markets. The policy here has to ensure a balance between banks as well as non-banking financial institutions in terms of regulatory impact. Capital requirements, there are two additional capital requirements, and this is something which is announced in line with the recommendations of the Narasimhan Committee second. The Narasimhan Committee second has given certain recommendations regarding the same, and also there was some we can see that there was some kind of expansion of banks business, and this is something which is required to explore various sources for enhancing capital. Moving to flexibility, we can see that the public sector banks are currently governed by three different statutes. Or to impart flexibility or for ensuring some level playing field for different parties, possibility of bridging all these institutions means the institutions which will deal with the financial transactions private sector banks, public sector banks, etc. So all these institutions should be brought in the Companies Act by transforming them as companies. So this is something which needs to be explored further. Apart from diversification of ownership, mergers, acquisitions, etc. have been happening till now. Moving to the other banks, apart from this private banks and public sector banks, we can have cooperative banks in the economy. There are regional rural banks. So, detailed examinations and early resolution of many of the problems these banks are facing, whether it is public or private or other kinds of banks, we have to understand that it is very much important to go for the resolution of all these kinds of problems. Coming to the tax with respect to interest or the interest tax, this is something which will be adding cost to the lending by banks. And the intention to abolish tax, it was announced in 96-97 period, and it is considered to be necessary to complete the process as soon as possible and to abolish the interest tax completely. So that's all for today. Please like, share and subscribe to this channel for more videos, and you can be a part of my Telegram channel and Telegram group to discuss your doubts. I'll be providing the links of the same in the description box. Thank you.